Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for March 8th, 2010. As always, this is Jason Ayres of OptionSource.net. Well, our key focal points continue to hold steady as we review the weekly chart of the US dollar index. The 77.5 to 78 range as well as the 79 to 79.5 range both represent important levels of support should the index slide lower. However, until we see a decisive break and close below 80, the US dollar appears to be in a holding pattern, with the euro being, of course, the most heavily weighted currency in the index. Now, a quick look at the daily chart reflects the consolidation that has been taking place for several weeks now. We are open to the possibility of this being a bullish flag, with 82 representing a key overhead resistance. However, traders should be cautious as the US dollar continues to look a little top heavy and may be poised for a retracement. Once again, we are keeping an eye on 80. The US dollar continued to lose ground against the Canadian dollar, with the CDD sliding down to test the upper range of our 102.5 focal zone. This range reflects an important level of support. However, the pair value will have to break back into the 104.5 range and find support there to lend credibility to any bigger picture US dollar strengthening. If the 102 level fails as support, the window is open for the CDD to test 100 or a US Canadian dollar trading at par. The US dollar closed the week strong against the yen as the YUK tested the 90.91 focal zone. With this level reflecting a typical measured retracement, a rejection here is likely to slip back down to test the 88.5-89 range once again, opening the window for an extended move lower. We will be looking for some consolidation within this 90.91 focal zone, however, lending further credibility to a possible push higher, with the first target being 92.93. The EUI continues to trade sideways as the US dollar bulls failed to gain any ground against the euro. With the pair value looking a little top heavy, a measured retracement would have us looking at the 71 to 72 focal zone for support. A break and a close below 73 is likely to signal the start of this move. Should the pair push higher, there is an important resistance level at 75. The PPX hit the lower range of our 67-68 focal zone before slipping towards the end of last week. This may be the start of a deeper retracement as the US dollar pulls back against the pound to test support at 65.5. However, there are a couple of measured retracement zones found at 66, which suggests that we may see an attempt at 68 provided support holds here. We'd identified what appeared to be a bear flag in the AUX last week, which opened the window for a further US dollar decline against the Australian dollar. Last week's break below 111 signaled the start of a move down to test our 109-110 focal zone. Unless the pair breaks back above 111, the path of least resistance appears to be to the downside. Let's review our key points. First of all, the US dollar index continues to consolidate above 80. A break below this level is likely to signal a deeper retracement. We can't rule out the possibility that a bull flag is forming. 82 remains an important overhead resistance. The CDD continues to slide, testing the upper range of the 102 to 102.5 as support. A bounce here is likely to meet with resistance at 104. A break below 102 opens the window for a drop to 100 or a US Canadian par dollar. The YUK found support at 88.5 and closed the week higher with a retracement testing the 90.91 focal zone. This represents an important resistance, and a rejection here is likely to retest last week's lows and possibly signal an even deeper slide in the US yen. The EUI continues to consolidate within the 73-74 box. Despite the fact that the pair value continues to look top heavy, we can't rule out the possibility of a bull flag formation. However, 75 remains an important overhead resistance. The BPX pushed higher to test the lower range of the 67-68 focal zone and rejected. The pair value closed the week lower but tests the calculated support. If the pair holds here, we are open to an extended move higher, likely hitting 68. The AUX broke lower as anticipated, closing the week with a test of 110. We may see some consolidation here. However, unless the pair breaks back above 111, the path of least resistance continues to be down. And this has been your ISE FX Options Weekly Outlook for March 8th, 2010. As always, this is Jason Ayres of OptionsSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.